Good morning, traders. It is Monday, August the 19th. Taking a look at the charts, we've got the 30-minute trend analysis chart on our left. On the right is the daily chart with our short-term cycle analysis at the bottom. And more or less, probably going to be another big volatility week. We've been in several weeks here, huge drop, big volatility swings. And again, the big question is, are we in the middle of are we somewhere right here where we could see a big leg down? Or are we somewhere right here where we're continue to go up and see the market continue to go higher? Now, overall, the bias is to the downside. Lots of weak signals in the market, and the market is rallying today. You can see this green bar. We got this nice strong move up today, about up 1% for most of the indexes. Now they are coming into the resistance, into these previous highs, into this kind of area here in the 20-day moving average. It's going to most likely gap overbought. You can see yesterday, or not yesterday, Friday's close, we had this red indicator spike up. The blue line here is 3. Anything above 3 is usually a short-term top. You can see a top here, you can see a top here, you can see a top over here, and we got a top over here. And usually the opposite is for the green, when you usually get bottoms to form whenever you see the indicator spike. And when you get these huge big moves, which this was reading, I think it was 7 or 8 or 9 on the chart, it's usually a fairly significant pivot low. And that's when the market crashed right here into this huge volatility low. And then on Friday, we had this sharp rebound, and to negate this 3% drop in the indexes, came back up for half of them, kind of came up to this gap window. It didn't fill the gap. Today, the market is rallying up. It's going to fill this gap that we had from last week, this huge gap window. It's going to be filled this morning, and price is going to be trading right into resistance, these previous highs, this falling 20-day moving average, and we are still technically in a downtrend, which is why the bars are red. Momentum, cycles, everything are to the downside. Now, if we take a look over on our cycles over here, today we've got this doesn't update, this bottom one doesn't update till the market's really open. I'm pretty sure here we're going to see all these, we're going to see the green, the blue, and the yellow get up into this overbought territory at the open, meaning we are going to be overbought. Our more momentum and short-term cycles will be overbought. We're going to be trading in resistance. We're going to have that gap fill, and we're going to have a gap up now, meaning while the market will have reached the upper end of this gap, it's going to gap from here all the way up to there, creating a gap that needs to get filled to the downside, meaning now the market has kind of gapped up here, and now it's going to have to come back down to fill that gap. And the question is, are we going to go down, test the lows, or continue to go much lower for this second leg down to test these lows that we saw back in June, or potentially go further? So a lot of volatility. We are short the market. We ended up getting short kind of at an awkward time down here because it looked like the market was on the verge of breaking down and continuing to run. We wanted to try and catch that second leg. Today, the market's gapping up. The price is going to probably hit our SH, our stop for our inverse ETF. But keep in mind, we haven't hit a target on it yet, so we have a stop based on the closing price, meaning if price hits our stop level during intraday, we do not exit the trade. We hold on to it. We want to see where price is going to close at the end of the day. If it's above if it's below our stop level, then we'll get out of the trade. But you don't want to get whipsawed intraday because we're going to see a big rally up today at the open, and we could very easily see it turn into a red bar and see it sell off and crash throughout the rest of the day, and we can catch the leg to the downside. The market loves to do these whipsaw actions. They'll swing you out of the trade during the day, and then by the end of the day, if you would have just held tight, the market goes in your favor. So when we haven't hit our first target, our T1 yet, we're always using a stop based on the close. We only are going to exit at the close or at the open the next day if the closing price was below our stop. Now let's just jump over to the other markets here. Let's take a look. Safe havens continue to, well, the bonds are down this morning, but overall safe havens have been ripping to the upside. You look at bonds, you look at utilities. Utilities have been holding up. They're the upper end of their range, whereas the stock market is at the lower end of their range. If we look at some of the leading indicators, if we look at the transportation index, I'm just going to move this. Let's look at the weekly chart real quick here of these kind of leading sectors. Look at the weekly chart. We are trading down near these lows, these pivot lows, very significant lows and highs in the market. So it's underperforming at the lower end of its range. If it starts to break down, things could get really ugly. And that's a transportation index which leads the market. If we look at the retail sector, we'll zoom out even more for this. This one is even more so very significant. You can see these levels here on the chart. This is what we call potentially a major topping formation. We've come up in price, it's rallied up, and then it's come up, it's put in like this double top formation. We've got this line in the sand where all these pivot lows, if this breaks down on a weekly basis, it's broken at intraday wise, but more or less recovered back. But if it closes on a weekly basis below here, we could start to see the retail sector really pick up speed. That means consumers are not spending, and there's the money is realizing that things are getting weaker, and we got a double top here. And the height of this top, just for a basic analysis, is usually the height of the distance of the breakdown. So we could easily see this drop down to this 26, 27 area, which will act as this kind of previous level here where the market broke out and started the next big rally to the upside. Now let's take a quick look over at, let's take a look at gold. Gold, we closed our gold position last week, more or less. Let me just zoom back a bit here. If we look back in gold, you can see here we hit a pretty major resistance area in the chart. Let me just move my cursor there. If you take a look at gold, it came back. Anyway, there was a spike up here. We got out at the absolute very top of gold last week with a UGLD position, or 3 times leverage gold. We got out of it for a 24% gain. You can see this resistance area, major support back here, and then it broke down. Support becomes resistance when you are underneath it. And if we look at the COT data, which I don't look at too often, but we're getting pretty extreme. We actually haven't seen a reading in the 290,000 contracts for the speculative traders here to the upside. And more or less what we're looking at here is simply when we get this type of reading in the market, something up in this area, we usually find a market top. And we've seen it happen more or less. This is a fairly short-term time frame. It's just going back to the 2015, but more or less when we get up into these levels up here, we see the market put in these tops. And so we're at a really extreme reading, something very similar to this over here, and we saw a pretty steep correction in the market, which is perfectly fine. This is what happens. We see the market, it's had a nice rally, very nice rally to the upside. It could very easily have a multi-wave correction here and settle back down into kind of a support zone, and then potentially take off and continue to go higher after that. More or less, we've got a rising trend line, we've got a series of higher lows, we've got a series of higher highs, so we are in an uptrend, but the market's overdone and it could very easily correct here going forward. So anyways, from a technical standpoint, our target standpoint, we are out of gold. It is pulling back again today, down another % and change. We will be looking to get back in to potentially gold miners or silver miners. And with that being said, let's just jump over to the silver miners real quick. SIL, we are still in. I am going to go back to the daily chart. Here is the SIL. We got into the silver miners on this big drop here when the Fed came out, and it got oversold based on news. When the trend is up and you get a big news-based move against the trend, you usually expect it to be taken back. We got in, we sold out somewhere right up here near the highs for a 6.5% gain. Our stop is now set at break even. Today, we're going to see most likely the stop get triggered at the open. So we've taken our first target, which means you now have a hard stop, meaning you've got a stop order in place with your broker. If our stop price is touched at any point in the day or the market opens below our stop, that order is executed automatically for you and you're taken out. So we're going to get stopped out of SIL at the open today. We will have closed that trade for a gain, and we'll be looking for some new setups in the market. Overall, metals are rolling over, showing signs that they're starting to get a little weak going forward. And if we look at our short-term indicator chart, you can see we got into this oversold territory. It rallied, we got out, and you can see here it's starting to get negative with momentum. Our orange bars are indicating a potential shift in the trend to the downside, and we could see a fairly steep correction lower to this lower end of this range for SIL. Not sure if we'll get back in SIL or GDX or GDXJ. We'll see which one sets up the nicest pattern going forward from here. Last but not least, let's just jump into the energies real quick. Natural gas down 2.25%, 2.5% now. If we take a look at the price here, it's still in a downtrend, lower highs, lower lows. It's kind of rallied back up here, created this little hook we talked about last week, how usually we like to see a short covering hook and then it can start to sell off. We are looking for a target down around the 2 or below 2 level for a long-term seasonal buy. Usually near this time, August, September, we see natural gas put in a significant low. So we're looking for a new low. We're looking for a bottoming formation over the next few weeks for us to get long for more or less a fall/winter rally. Looking over at crude oil, up 0.5% this morning. Overall, it came down, hit our lower target here, bounced very nicely off there. It is now trading somewhat in a bearish formation. If we look at these highs, you can see it's still trading under resistance, under this falling trend line. It's still making a series of lower highs. It's making a series of lower lows. So we are still in a downtrend. This current move here has dropped. We're forming a little bear flag. Bear flags are usually 50% of the move. So you can usually take the distance of this bear flag, and from where it reverses, you can take that next move to the downside. So we could very easily see a continued move lower this week. Oil's trying to put in a bottom. This is a very major support level. So the big question is, can it break above this trend line and start to move higher, or is it going to roll back over and go down? Currently, the trend is still, it's kind of mixed. It's just starting to turn short term into a buy signal. The momentum is starting to shift, but it is still stuck under resistance. This is the first key resistance area, this previous high. When it starts to break that, then it could be off to the races for much higher highs. But right now, it's got mixed signals and not really looking to trade it quite at this point. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.